For more on General Motors earnings, the automaker's best, as I mentioned, in more than 20 years, I want to bring in Brian Johnson. He's an auto analyst at Barclays Capital. He has an outperform on GM, $44 price target, right, Brian?
That's right.
And by all accounts, the headline numbers all look great, mostly great for GM, but the stock is down today. What is that a product of?
Well, the headline number was good. It was a mixed bag. There were encouraging improvements in profitability, especially in Europe, where it broke even, also in Latin America and China. But I think what we're going to be focused on in the conference call is what's going on in North America. Came in light to both our expectation and what we believe analyst consensus was. About a 5.8% margin. We were looking for about 7.8%. Part of it is probably due to the year-over-year pricing. GM had that heavy incentive program in January, February that we backed away from. They indicated some optimism for the remainder of the year that those North American profits are going to improve. And I think we're going to need to see that to get the stock back. But
doesn't the smart money already know that GM is pulling back on those incentives?
Yeah, but we would have, so it's going to be critical where we think kind of second and third quarters are going to come out with that.
Okay, Brian, what is going to get investors back into GM? I mean, the stock just has had trouble. It's above the IPO price now, but it's just had trouble getting investors to like that stock.
Well, as I said, I think the real number we're going to be focused on is North America. Can we get into the high single-digit margins on that with the kind of improving volume that's coming in the marketplace? That should be enough to kind of get, since the overall value is fairly compelling, to get GM moving again.
But what about Treasury? What about the Treasury stake? Isn't that an overhang?
That's the overhang, and maybe by the end of the month that gets cleared up.
Right, because they're going to start selling it, I think, May 22nd or something like that?
All we know is the lockup expires in mid-May.
Okay. So what's going to take, I mean, is it just going to be only North America or the uncertainty in North America that's going to drive it to the $44 price target, or what else?
Well, we'd like to see continued improvement in the North American market. We think actually the Japanese supply disruptions are going to be a net positive for both Ford and GM, with both price increases and share increases. So I think as we start seeing that come through, on top of what we now see is a better base in international than they had in the last couple quarters.
Okay. Brian, thank you. Brian Johnson, our auto analyst at Barclays Capital, for joining us on GM.